Agencies must be monitoring this situation.
Yeah, we already have a statement, and President Jacob Zuma's late-night cabinet reshuffle has, of course, intensified fears that South Africa could lose its investment-grade credit rating this year. Local and global analysts have been telling their clients that a downgrade into non-investment status, or the dreaded junk status, is now likely, and Fitch rating agency has released a statement saying that the cabinet reshuffle signals a change in policy direction. Fitch says the move will raise political tensions within the ANC and its allies, potentially weakening public finances and standards of governance. It says that government's efforts to bring down debt will also be deprioritized. It also believes that efforts to improve transparency and governance at state-owned enterprises will be halted. Fitch says the ANC faction, weakened by the reshuffle, is likely to fight back. It says this increases the chance that government will resort to costly measures or legislation that will weaken economic growth. Fitch and another global rating agency, S&P, rate South Africa only one notch above junk status, and both have a negative outlook, which means that a downgrade is more possible. Rating agencies basically assess our ability to pay back our debts. That affects the terms and interest offered by creditors. In other words, the cost of borrowing. Junk status means that more money will be spent on interest payments, less will be available for social spending. Outgoing Finance Minister Pravin Gordhan today warned that the knock-on effects could also impact ordinary South Africans who want to borrow cash. Well, earlier I spoke to Attard Montalto from Nomura Holdings based in London.
So I think the real question mark here is, what is the ultimate driving factor? And on the surface, at least, it looks like two anti-corruption people, two conservative people, two people in the natural mold of national treasury that investors like about South Africa, have been removed from office for precisely the reason that that is what they are like. And I think that is the worry for investors here, is that ultimately this will be negative, not for fiscal policy necessarily, but for procurement, for state and enterprises, for all those sorts of reasons we watch very carefully. But investors are really sitting on the sidelines for now. Actually, markets have been actually remarkably calm, I think, waiting for some indication from the rating agencies as a reason then to start selling more aggressively.
You have suggested that this could trigger downgrades. If that perception is widespread, that the Treasury is being looted or captured or used for dubious ends, in your mind, are we definitely looking at downgrades?
Eventually, yes. I mean, there are two routes. So the original expectation was it would happen relatively quickly. There would be the act of removal that is important more than who is put in the place. But I think the worry or the fear for South Africa maybe there is that the rating agencies have been giving too much benefit to the doubt. They'll say, maybe we'll wait till actual policy change. And so maybe it takes a little bit longer. But ultimately, I think we shouldn't forget the macroeconomic shock that's going to come from this, the uncertainty that's going to drive growth lower in an already very weak fiscal environment. So I think even if we don't get downgraded straight away, ultimately they'll come through that route slightly later on.
So huge economic ramifications. I think you used the word calm, looking at the market reaction. It seemed quite extreme, though, the rand drop last night. Just explain a little bit further of what you expect could happen and what investors are waiting to see.
Well, I think the most interesting way of looking at rand, if you zoom out maybe and assume you're a politician sitting in Pretoria, then actually rand doesn't look that dramatic. We haven't really breached the high in rand that we got to say a month ago or so. So I think if you view it from the perspective of a politician, the market hasn't really sent a signal that the reshuffle is a bad idea. But I think the other issue that we're seeing is relatively light flows here. As I said, I think that suggests that investors are waiting on the sidelines, partly for ratings, but also I think there's too much in the markets of a sort of hope, if you like, that this will be reversed like Nene Gate. This will be a weekend special again. Whereas actually I think that ignores the fact that that a very clever playbook is being used here by the Zuma faction. This is a lot more sticky, and this is ultimately for, if you like, a better purpose, if you like, politically than Nenegate, which is ultimately to win the elective conference at the end of the year. And in that sense, the imperative is very different from last time.
Final question. We're seeing some of the top 6 members of the ANC speaking out. In other sectors, there are calls for open revolt. Could markets be waiting to see if this actually leads to the removal of the president himself, and what's sort of the sentiment towards that?
Potentially, exactly. I think that's where some of that hope or optimism from markets in the short term is coming from. But I think ultimately the president wouldn't have taken this action if he wasn't sure that he has a majority in the NEC, but also if he wasn't sure that the fracture that does exist in the parliamentary caucus is smaller than expected. And on that front, I think it's around 50 votes that are required to split off from the ANC to get a no confidence motion passed, and maybe the split is indeed slightly smaller than that, and is not as big. So I think it's a very calculated decision in that sense as well around this reshuffle. But no, the market I think will focus in on these events if there are indeed votes in Parliament, etc. The markets will definitely be watching very closely.